possibility of the Federal Reserve increasing the interest rates. The money printer will never stop printing and printing and printing money, which is the highest inflation we've seen in 40 plus years. Lots of people entered the market. Some people were even taking margin to trade on the stock market. They were creating this army of cultists. And now, yes, back to the inflation, which once again, like I mentioned previously, reached 7%, the highest inflation we've seen in 40 plus years. And so the responsibility of the Federal Reserve is to basically balance the inflation, the interest rate, and to make the economy basically balance. You increase interest rates way too high, the economy will stop developing because it will be so expensive to borrow money. So technological companies, for example, will not be able to do too much research and development. For example, if you raise interest rates way too low and print more money, which is one of the worst things you can do, but they still do it. They still did it, and maybe they'll still continue doing this, who knows. This will create the unprecedented inflation, which once again, according to this, reached always 7%, the highest of 40 years. I want to emphasize this once again, because so many of us, including me, were not even alive when the inflation was that high. And so once again, the responsibilities of the Federal Reserve is to balance. When the inflation goes way too high, they need to increase the interest rates so the inflation goes down. And when the inflation is way too down, or the economy is not growing too much, or the economy needs help, then they decrease the interest rates, which supposedly increase the inflation. So this is like you do one thing to balance the other, and then another thing balances the first one. Long story short. And as you can see, according to this graph, these two, inflation and interest rates, were more or less going according in the sync. So they're more or less symmetrical, if you want to call it like this. They were going in the same direction. But since the beginning of this, since this unprecedented money printing and low interest rates, inflation went very, very high. And there is still no way to say if we're gonna stop at this point. It might go even higher. And interest rates are increase in interest rates is way overdue. And so this is my main concept of my thesis, why I think that the stock market can crash in the very, very nearest future. But some of you might ask, how would an increase in interest rates might crash the market? And what if I tell you that almost 40% of software stocks that we have right now, maybe even more, are completely unprofitable? And this brings me to one supporting argument I mentioned 5 minutes ago, that these companies that YouTubers promote, or like other companies, they are completely unprofitable. Some of them, they're completely unprofitable since the inception, since they became company and then they went public, and all the way since the beginning they're still unprofitable, not making any single cent on dollar. And people still invest in them because they just literally invest because the creator of the company says, oh, we're gonna have like 10 trillion market dollar capitalization by the end of 2040. Our industry is life-changing. Our industry is the best. And yes, like 1% of companies like this, they might survive, let's say so, and they might become what they're supposed to be, what their founders, they envision them to become. But 99% of unprofitable, severely unprofitable companies will definitely go underground as soon as the interest rates go up. And I'm going to explain why in a moment. So, besides these software companies, there is also Goldman Sachs non-profitable technology index, which basically means it includes every company from technological sector that's not profitable. As you can see once again from this slide, from 2020, I'm gonna use this word once again, the line became vertical. So many new companies that appeared, they are completely unprofitable. So many publicly traded private companies that are not making money, but investors still invest in these companies all of their money, or lots of their money. But besides unprofitable companies, regular companies from the S&P 500 index, which is once again 500 biggest companies on the US stock market, so many of these companies started to take on more debt. Because once again, money was cheap. It was so cheap to borrow money because interest rates are so low. You can serve your debt so easily. It's not a big expense, let's say so. So many companies started to take on additional debt. And as you can see, right now, average debt to asset ratio is approximately, total debt to asset ratio is approximately 32%, which basically means that third of total value of assets is represented in debt, let's say, so in debt capital. And the rest is obviously in equity capital, which is as high as we've seen since the beginning of this millennium. In tech bubble, during the tech.com bubble, it was approximately 25-26%. During 2007-2008 great financial crisis, it was also around 25%. Now it's 32%. Companies borrow more debt. And now maybe you can already start to see the connection, how increasing interest rates and so much leverage and so many unprofitable companies can be connected. So in the way they're connected is the following. When you have so much debt, because it's so cheap to maintain it, what happens after the interest rates go up? It becomes so much more expensive to maintain, to serve it. Let's say, so if right now you're paying, just theoretically speaking, right now you're paying 0.25%. As soon as the interest rates go to, like, let's say, so 2.5%, which is not high, don't get me wrong, because sometimes interest rates can be like 10-15%, so 2.5%, it's still not that much. It's just that 0.25 is extremely low. But as soon as it goes to 2.5%, it means that interest payments will go up 10 times, 10x. Companies that were paying $500,000 in their debt maintenance now will be paying $5 million, 10 more times in interest expense. So, and as you can see, S&P 500 got so much debt on its balance sheet. Other companies, like 40+% of technological software sector companies, industry companies, they're completely unprofitable, which basically means these are the companies that have to value every single dollar that they make. They cannot afford losing money because they're already unprofitable. And so what happens when their interest expenses go up by 10 times or even more? These companies will start going bankrupt one by one. So at first it will be small names that no one talks about, then it will be bigger companies, then it takes one company that kind of people heard about to go bankrupt, and this will create the chain reaction, Armageddon, destruction, devastation, all this kind of thing. All it takes is just one company with at least a well-known name. And so, but situation gets worse from here. Just hear me out, This is where it gets even more ridiculous. So companies that are completely unprofitable, they're also called zombie companies, which basically means whatever money that they make, they use all this money to just stay alive, just to stay afloat. Literally, they make money and they spend this money to just survive, not to go bankrupt. So, and in order for these companies to stay afloat, what other thing they can do besides sell their own shares? They can also issue debt securities, which are basically bonds. So, and these companies will obviously have junk rating for their bonds, which basically means that the probability of default is extremely high. And default obviously means that these companies will not be able to pay their debt holders. And as you can see, risky, junk-rated US companies are issuing debt at a record pace. So many companies that are right now are at the brink of destruction, brink of collapse, brink of bankruptcy. Besides them delaying the inevitable, they're also making the situation even worse, taking even more debt by issuing these debt securities. It's like one time they will need to pay for everything that they're doing so far right now. But right now they're like, this. There was an episode from Simpsons when the Homer said, "That's not my problem. That's the problem of the future Homer." And this is exactly what I think these companies are doing.
That's a problem for future Homer. Man, I don't envy that guy.
But wait, there is more. Just when you thought that it couldn't get worse, it did get worse. Just look at this graph. So many new IPOs and these notorious SPACs that were created just in this 2021 alone, 2020, 2021 combined. It's like unprecedented number of IPOs, and you know that majority of companies after they do an IPO, their share prices go below IPO value, below IPO price, let's say so several months after the IPO. All we see right now in the media, like this Coinbase, RobinHood, yes, of course, these are popular IPOs, and even though their share prices still went down up to like 81% from their all-time highs. But just think about all these IPOs or SPACs that none of us ever heard about. these are the companies that most likely also losing their like 80, 90, 70% of their share prices, companies that are completely unprofitable, because one of the reasons to go public is to raise additional capital, which basically means either you want to save yourself from going bankrupt, or you need this additional company to develop the business, do mergers and acquisitions, research and development, and all these kind of things. So many of these companies when public became unprofitable. And as you can see, RobinHood was one of the companies that did it. And just think about this. RobinHood is the online broker where the average account is approximately, like if I'm not mistaken, around $10,000-$15,000, which basically means maybe even less, most likely even less, which basically means that these are the people, these are the investors or traders who just entered the stock market just to play around, fool around, use their stimulus money to invest in Dogecoin or in GameStop or AMC, so obviously to the moon and all these kind of things. But anyways, this is not real investing. This is just straight to the point. That's just the fact. And so when you see that RobinHood says that Dogecoin accounted for 62% of crypto revenue in Q2 of 2021, what does it make you feel? Me personally, I knew since the beginning that this is just a ridiculous thing to see. So as soon as the Dogecoin meme dies, which inevitably it did, and I knew that this will happen because now no one cares about Dogecoin. Elon Musk tries to pump this coin in the Twitter but that's just the reality. This is a meme, this is a joke. The creator acknowledged that this was created as a joke. So he has no idea why it got so much traction, so much interest or anything like this. All this is one big joke. As soon as Elon Musk is tired, bored with making fun of this Dogecoin, that's it. It's even gonna go even lower than it is right now. Right now, at the moment of this video, I think it's like 15 cents approximately, maybe even less than 15 cents. At one point, before the Saturday Night Live, it was almost 70-80 cents. This was the highest it has ever been. Right now, it's like what? Negative, it's down like 70-80%. So, when you see that the 62% of revenue comes from this one coin alone, absolutely 100% for sure, I knew as soon as the meme goes down, the stock price goes down, because that's it. The RobinHood will lose so much of its revenue, which obviously inevitably happened. And as you can see once again from this slide, the RobinHood is down 81% from its all-time highest number. So now back to the IPOs. Like I mentioned previously, so many of these companies are completely unprofitable or barely profitable. And yes, in fact, this graph confirms it. As you can see, around 80% of companies that go public, they are unprofitable. They do not make money at all. And this has been a significant increase during this pandemic, obviously. And with everything that has happened, some of you, including me, might have asked why we haven't crashed earlier.